välkomna tillbaka. Vi går vidare här ikväll med nästa bolag. Det är Strax som är ett företag inom tech som äger olika varumärken. Welcome to the stage, Gudmundur Palmason. Please.
Thank you very much. So thank you for having me here today. I'm here to explain what Strax is all about. And I am the CEO of Strax, and I'm also one of the two largest shareholders. And I'm from Iceland, so I have to clarify right in the beginning that the name Strax and the company name refers to the Icelandic Strax, not the Swedish Strax. So it's kind of amusing to see in the beginning that the presentation will start soon about Strax. And Strax in Icelandic, however, means immediately. It doesn't mean soon, it means immediately. And this is what the company has been all about from day one. So basically we develop consumer brands. We focus on 3 product categories. We do tech accessories, personal audio, and then as a response to the pandemic, we pivoted into health and wellness products. We have employees on 3 continents, 220 people. Turnover in the last 12 months, 117 million. And our EBITDA margin for that same period, 5.5%. So what really Strax is all about, we have a massive customer base around the world. And when we develop brands, we target the retail doors that we reach through our distribution network. The company was founded in 1995, so we've been around for a long time. And we have, during that time period, acquired 6 businesses, and also we've sold a business, which I'll come back to later. A little bit about the market we operate in. So tech accessories and audio products, personal audio products are usually correlated with smartphone sales because you need a smartphone to utilize these products. So if we look at the smartphone markets and the number of products sold on an annual basis, so we have on average in the last sort of 7 to 8 years sold roughly 1.5 billion units of smartphone per year. And if you then consider how many people are using their phones for more than 12 months, so the installed base of what we could consider as our target customers is roughly 4.7 billion people around the world. We, as I said before, are a subsector of the smartphone industry. We sell protection product being cases and screen protectors. We sell power product being chargers, wireless chargers, travel chargers, car chargers, etc. And then on the personal audio side, we sell true wireless headsets and speakers, etc. So even though the smartphone market has somewhat plateaued in the last few years, we have seen growth in the global accessory market, and there are 2 reasons for that. One of which is that today people buy more accessories per device. So I, for example, on this phone, I have a case, I have a screen protector, and then I have this stand function here that I can use to consume and create content, which is quite beneficial. That's one reason why the accessory market is growing faster than the smartphone market. The other one being that the average selling price of a single accessory is actually going up. So we operate in quite significant markets on all our product categories. If we take this even down further and look at the audio market and a subsector of that, the true wireless market, which are sort of true wireless products like Urbanista has here, and like the AirPods that many of you recognize. So this market is expected to grow at accelerated rate relative to the accessory market as a total. And if you consider that the latest forecast that I saw was that out of 40% of all smartphones that will be sold, there will be 1 sale of true wireless products. And if you go back a couple of slides, on average there are 1.5 billion phones sold per year. If this forecast holds true, we would be selling or seeing sold on an annualized basis 600 million units of true wireless products in 2025. when it comes to Urbanista, our record year in number of units sold was back in 2019, pre-COVID. We sold roughly 600,000 units. So we are just a small piece of the total market, although we intend to capture a greater part of it going forward. The market has been heavily disrupted by COVID, and we have felt it across all our brands because we do rely to some extent on the retail partners we have across the world. And it's maybe difficult for Swedish individuals to really understand the impact of COVID on retail sales and retail stores have not experienced lockdowns in Sweden. But if you go to Germany, for example, you look at the last 18 months, German retail stores and our retail partners had closed doors for more than 200 days. And the same can said be in the UK, and then other markets had a little bit less, but still a significant impact on our business. We were hoping and expecting to come out of COVID sort of early Q1, Q2 this year, but unfortunately, as you see on the news, we have been sort of still fighting COVID, which will, to some extent, impact our sales this year. And then what also, sort of in the aftermath of COVID, the whole globe is suffering from shortage on the chipset side, and that has resulted in less smartphone being in the market. Many of the smartphone manufacturers are out of phones, which also then obviously impacts the sales of accessories. So the business and industry is a little bit upside down, but of course this is a temporary situation, and we expect to come out of COVID and the impact from COVID sort of in the second half of next year. Our business model is basically, on one hand, we own and develop brands, and on the other hand, we operate as a distributor. So we have a broad customer base, which is sort of beneficial when it comes to developing brands. We stand and sit close to the major retailers around the world, and we can to some extent target our brands and position our brands to fit their needs. And I can tell you, I will show you a case study of one of the brands we acquired and then later on divested. So we acquired a brand in 2015 called Gear 4. At the time we acquired them, they were generating sales of roughly $1 million in protection category. In a matter of 3 years, we had grown those sales to $24 million in roughly 3 years, from 1 to 24. And we were approached by one of the largest players in the industry, a US company called SAG, and they ended up acquiring the company from us, or this brand, for 34 million euros, a brand we had acquired roughly 3 years earlier for 5.5 million. And we have other brands in our portfolio now that we feel strongly could sort of take this journey again in the next 24, 36 months. Our growth agenda, of course, as I said before, we have suffered quite a lot as a result of COVID. We have still managed to sort of grow our top line, even though we filled the gap from accessory sales with sales of products in this new product category, health and wellness. But we really want to ride the underlying growth factors in the industry. It's growth in the accessory segment, growth in the true wireless segment. We intend to develop or acquire new brands going forward. And one of these days we have to figure out how to grow profitably in e-com. We haven't really realized how to do that yet. I always say it's easy to grow in e-com, but it's not so easy and actually super challenging to do that in a profitable way. But we are, of course, trying to sort of adapt and learn along the way and try to figure out how we can grow this important challenge for us going forward. We have recently launched 2 new brands that address the e-com space specifically, and we feel that it will be beneficial for us to have digital native brands that won't be challenged by traditional retail in terms of price competition. So it will be an interesting test for us, or a trial, to see if we can grow brands without losing a significant amount of money like we've done in the brands we've tried to launch online so far. Quickly on our own brands. So the largest brand in the portfolio right now is a tech accessory brand called Urbanista. We acquired Urbanista back in 2014, where they were selling annual sales roughly 3 million euros. We managed to grow that again to 23, 24 million euros in 2019, so almost exponential growth in the first 5 years. And then COVID hit, and unfortunately we've seen a major hit on Urbanista, and we will most likely have our second consecutive down year this year. But we feel strongly about the portfolio and the roadmap of that brand, and I'm sure that once retail will sort of normalize, Urbanista will definitely pick up again. Next brand is Clicker. This is this stand function I have on my phone. Significant market out there. The most notable brand is a brand called PopSocket. And the US is by far the biggest market for these type of products. We have managed to secure listings with some of the largest retailers in the US, which happen to be some of the largest retailers in the world. And again, this is a great product. And the adoption rate of Clicker, when you give somebody or promote the product, roughly 80% of people you give or hand the product to test, they use it on a regular basis, and we haven't seen that with any of our other brands. So when it comes to sort of really taking advantage of the benefit that the Clicker brings. The third brand you see there is Risman and Finns, a brand we acquired in 2019. Fashion tech accessory brand, Stockholm-based, has also suffered from day one due to COVID. And again, since we acquired the brand, we've managed to, I would say, reorganize and position the brand in a way that we feel it's significantly stronger now than we acquired it. But unfortunately, our sales have declined for the second year. But here we're looking forward to seeing retail come back really sort of full speed in the next few months. The other two brands I want to mention here are the ones you see at the bottom, middle bottom. On the left-hand side is a recently launched online-only brand, digital native brand called Grell. And the other one is a digital native brand, both in this personal audio category where we expect, and the whole industry expects, to sell globally 600 to 700 million units. And these are the brands we want to take a part of that, along with Urbanista, of course. A little bit more detail on Dottir. This is a brand that we developed along with two CrossFit female athletes. And CrossFit, if you're not familiar with the sport, it is one of the fastest growing sports in the world. It is one of the largest franchise sports in the world, and it's one of the largest franchisees in the universe at the same time. There are more than 11,000 gyms, CrossFit gyms across the world. And then the key benefit also here, when it comes to sort of being able to compete online, is based on the fact that these two brand ambassadors have in excess of 3 million Instagram followers. They have a significant following on other social media as well. And we, of course, intend to target these followers as well as the CrossFit community as a whole, and ultimately athletes around the world. And here, the product pipeline and roadmap is quite strong, and we feel good that this will really be successful in the coming year or two. The other online brand, only brand, is called Grell. This we developed with an audio engineer, Axel Grell, who is sort of a father figure in the audiophile world. He was the lead designer at Sennheiser for over 2 decades. And here we've also teamed up with a community called the Drop.com with more than 7 million subscribers. And we will have access to the Drop community to promote Grell on a co-branded basis. So again, will be quite interesting for us to be able to test our online skills when we don't have the competition from other retailers that might be distributing the product, and also being able to access a community or traffic to your store to see if you can convert them into sales. We've had great feedback from the media on this product, and the few end users we've been able to ship to products have been extremely happy with the high quality of the headphones. So again, market for true wireless products and audio in general is growing quite fast, and we have 3 strong brands that can really take a bite out of that industry in the years to come. We also, within the Strax umbrella, we have licensing agreements with the largest, some of the largest brands in the world. You recognize Adidas, for example, Diesel, etc., where we have the exclusive right to manufacture products carrying the Adidas or the Diesel or Bugatti and some of the other brands that we have licensed. This is a business that generates roughly 8 to 10 million euros per year for us in sales. And the key benefit here is you have a product that is differentiated, meaning that nobody else has the same product. And often this is used sort of as a Trojan horse to enter a retailer where we can then later on tag with some of our other brands. The other part of our business, so we are an integrated, fully integrated business. On one hand, we own brands and develop brands and grow them. The other part of our business is traditional distribution. So we have a distribution platform covering Europe with a centralized warehouse in Germany. And out of this function, we do basically 2 things. On one hand, we distribute third-party brands. You might recognize JBL or Jabra and a few sort of brands that are well known. And then, of course, we utilize this distribution platform to sell our own brands. This has been a very stable business in the last 5-6 years, and even throughout COVID, it's been quite strong and been sort of the backbone of our business, and really kept us going throughout the COVID period, whilst at the same time our brands have suffered as a result of retailers being closed. So you might recognize some of these names here in the Nordics. For example, we service and have sort of historically focused on telecommunication retailers, but we also do the typical sort of Elkjøp and Clas Ohlson. And then this distribution platform has customers across Europe. Our key markets are Germany, France, Switzerland, and the UK. And then we have sales offices in the Nordics and Poland and Benelux as well. The other distribution part is a business we acquired back in 2018, a company that specializes in online marketplaces and sort of takes a product or a brand and builds and lists and promotes them on the likes of Amazon, eBay, etc. Highly specialized, not an easy business model, but still a great go-to-market tool for our own brands. You have to be on Amazon if you really want to establish and build a brand. It's almost a necessity evil, but still this can be a profitable business for Strax as a whole, and we look at this as a vehicle, again, for our brands to enter the online marketplaces globally. Quickly on the financials, I told you earlier that sort of we managed to grow the business historically. If you're looking sort of 5 years back, we've gone from roughly 65-70 million to 114 million euros in 2019. Then, unfortunately, COVID hit. We saw a decline in sales of roughly 2 million or 2% in 2020. But if you would look at our core business, which are these tech accessories and audio products, we saw a decline last year of roughly 20%. We were able to set that off to a large extent with this new health and wellness product category, but not completely. We were expecting, as I said at the beginning, that COVID would sort of subside and be eradicated in 2021, but unfortunately that has not materialized. So we have been dealing with COVID to a large extent since it started back in February of last year. But still, sort of markets will normalize and stabilize, and we are expecting that to happen sort of come second quarter next year, and then at the back end of next year that they will be completely sort of at pre-COVID levels and hopefully stronger than before that. Strax as an investment case, I always have the same story. this is a typical example of the sum of the parts being significantly greater than the whole, meaning that if you would break Strax into several individual businesses, evaluate each one of them, you would get a number that is larger than the market capitalization of Strax on the Nasdaq exchange today. We were faced with a similar challenge when we sold this Gear 4 brand back in 2019, that we sold the brand for 34 million euros. At the same time, the market cap, including this brand, was 28. And I think that's a great example of what we believe is also happening today, that the individual parts are significantly greater than the whole market capitalization of Strax today. Well, thank you very much.
Thank you very much, Gudmund. Och ni som tittar, glöm inte att skicka in några frågor om ni har det till Gudmund nu. Antingen via sms eller i chatten. I'll start off with one question which I think is important for you guys. You have been talking about spinning off parts of your business.
Yes.
Into two different companies.
Yes.
What's the rationale behind that decision?
I think the rationale is manifold. One of which is this point I mentioned here at the very end, why you should invest in Strax, is we have had a tough time, I would say, explaining really what Strax is. So we talk about this integrated business model of own brands and distribution, but we are continuously measured and judged and valued at a fully consolidated basis. These are very distinct businesses. There are synergies, and we have even changed back in 2019 or starting January 1st, 2020. We created new segments for the segmentation reporting in our quarterly reports, just to try to educate the market on sort of what Strax is all about and how we should be viewed and valued, but still the message hasn't come through. That's one. Try to clarify and simplify the whole valuation analysis. But being an integrated company has also created operational complexities, and we are hopeful that the separation, should we proceed with it, will release complexities and eventually sort of increase operational efficiencies.
Okay, but it's quite integrated now, right?
No.
Okay.
It's surprisingly non-integrated.
Okay.
I would say we've managed the European distribution platform almost entirely as a standalone business for the last few years. And the separation will be, I would say, from an accounting and financial reporting point of view, not that complicated.
Okay, and not on a day-to-day basis as well?
There are, of course, some shared services within the group, but 95% of the costs sit within the individual operational segments.
Yeah.
We will have to decide for the remaining maybe 5%, should we continue to carry on with service level agreements, or should we just completely separate? But one of the functions that, for example, the distribution platform provides to the brands is distribution and logistics. So the brands today are shipping products into Germany, and we redistribute sometimes to the customers of the distribution side, but sometimes to direct customers of the individual brands. And these are what we believe are already performed at an arm's length basis and competitive pricing. So we don't know if the brands, if we separate and the brands would go to tender for logistic services, we might lose out, but we're willing to take that fight and fight for the business.
Yeah, okay. And I have a follow-up. When do you think that separation may occur? Are you planning to list it on First North or?
We are, again, I want to emphasize, we're in the early stages. We're evaluating the possibility and sort of the benefits and of course the risks as well. This could be a timely evaluation phase. We all also know that there's a backlog at Nasdaq just to have prospectuses reviewed or company descriptions reviewed. But the time frame is probably 2022 as a whole. I think that's realistic. And we would be looking at listing the distribution platform separately on Nasdaq First North.
Yeah, okay. Thanks for the clarification. I think inflation is on everybody's lips and different bottlenecks. How does that affect? I read your interim report and your gross margin was quite affected. It looked like that. Is that because of increased material costs and freight costs, or why is your gross margin under pressure?
The biggest reason for the price margin or gross margin pressure is product and brand mix. Okay. Of course, we feel the impact of freight cost increases, other input cost increases, etc. But when we run an analysis on individual product line basis, we're not seeing a significant price erosion. If you look at, however, the product mix, where we have been selling face masks and gloves, sort of in two major governmental bodies, just like the UNICEF and other local governments, etc. Those are products that carry lower margin than accessories. So on one hand, it's been this product mix that has impacted the margin quite significantly, and the other one is brand mix. So when we sell our own brand, we generate twice the margin as when we distributed a JBL product, for example. So we've been impacted by this product mix and brand mix, but of course, freight has had significant, less though, impact on our average blended gross margin. We we've seen 40-foot containers increase anywhere from 7 to 10 times in the last 18 months, which is quite significant. So a container that used to cost $2,000 to $3,000 from China to either the west coast of the US or into Europe is now costing $27,000, $30,000.
Yeah, of course. I mean, you need to either raise prices or you will cut your margin, right? If you have that kind of price increases.
I believe it's inevitable that we will have to increase price.
Yeah.
You never want to be first, but you certainly don't want to be last. And we are seeing that come now because, as I told you before, we are a distributor of third-party brands, and we've seen price increases come our way in the last few weeks, and we will, of course, follow suit.
I have a final question. Time is running out. You also, in your interim report, you state that you are planning to sell the health and wellness brand. Is that a way of you guys to show the value of a brand, or could you elaborate a little bit about that, how that process is going?
Yeah, we communicated that we would sell non-core assets. So health and wellness sector or product category of the business is one of the two we're looking to divest. The other one is the licensing business. Yeah. Even though it's a licensing business in the same product category, it's still different than when you own a brand. You don't control really the product portfolio or the roadmap. You're always dependent on the licensor's approval. So and we would look to divest those two businesses individually, not together, because they're completely unrelated. And the health and wellness business was a great business for us, and actually a necessary business when we saw 85% of our retail partners with closed doors in April, May, and June of last year. We had to do something. And that's why we sort of utilized the existing organization to sort of enter a category that at the time, was profitable and high demand. And luckily, we've also managed to create a consumer brand within that category called Evo Plus. and we have major tenders that we have won, and we are serving major customers, so we believe we've built some value. And we will utilize the proceeds to reduce debt as well as continue to develop our brands.
Okay. Thank you very much, Gudmundur.
Thank you.
We need to move on in our